Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over excess proof. What it is, why it shows up, and why I prefer to wait for it when executing a trade. First of all, what is excess proof, right? What am I talking about? This is when you have a market that was in a form of consolidation. Right? So it's in a form of consolidation or constriction in some way, and it breaks out of that consolidation and then returns to the consolidation as proof and then bounces once again as excess proof. Right there. That's the excess proof. This means that it creates quite late entries. I mean, you're getting in way, way late, but the trade-off is that you now have much more information at your disposal that you're able to trade off of to further increase the odds of success or give you a clue to skip the trade altogether. So let's take a look at some examples here of what I mean by excess proof. So let's take a look at an example on the NASDAQ here from a POC perspective, in that excess proof would be from the perspective of the reversal, buyers who were looking to buy the previous support down here. So keep that in mind when we're looking at this. These are the longs who are looking to get in, but they need excess proof to do so. That way they know that they're getting in at the right time. Now, what's interesting here is that excess proof would essentially dictate that we have a market constricting, which we have here. And in fact, actually, we've got a secondary constriction. But we've got this POC that the market is getting stuck on top of, and it's constricting here. And effectively, what the bulls are waiting for is for that excess proof. Break back above. Show us that you can break a previous high. Show that we can break some of these previous swings. Really show it, right? That's the excess proof. And when we get that pullback, that's their chance to prove it, right? That's the excess proof bounce. And then we get a continuation back to the upside. Now, maybe it's off the POC. It could be off of the previous structure. It could be off of a channel. It doesn't really matter. That's not the point here. But what we're looking for is that initial consolidation, the break, give us the pullback, and then give us the excess confirmation for the continuation. And this one's really interesting because it hasn't happened yet. This is one that we can actually watch back in a couple days or next week or so and see how this all played out, because really the excess proof is still kind of waiting, and that bounce would be right there in the 240s, where the bulls can then try to rotate it back up towards the highs and maybe even finish the job all the way back up towards the top. Let's take another step back in something that's a bit wider out. We're looking at a slightly larger perspective here. And here we can see that the market is in an incredible bear trend to the downside, breaking aggressively lower, just absolute pile driver. Very realistic that sellers are going to be looking for continuation. And if the bulls are looking at this as an area of support, maybe they're trying to buy down here, they're certainly going to need excess proof in order to do so. Now, one of those reasons, or one of those things of excess proof that we need, is a sideways consolidation, which we really don't have yet. So we'll see if the sellers can take over. We start churning a little bit higher. We get a little bit more of a pullback, still kind of chopping around. For the most part, though, this still has some angular momentum. We haven't really gone fully sideways yet. We're creeping up to the previous swing high. The market is grinding a little bit further up. Now we're starting to pull back a little further. Okay, now we're pulling back a little further. Here we go. So now that we're pulling back a little bit further, when we're looking at this excess proof, if the bulls are going to take over, what do they need to see? Well, first off, if we look back at the previous POC, that's anchored back at 15,000. What a surprise. So the fact that we rallied all the way back above 15,000 and have now broken back above, realistically, that's the perfect spot to come back to. That's the excess proof point. Get back to the 15,000s, demonstrate that the market wants to justify another bounce, and then they can get going from there. Getting close, seeing a little bit of bouncing. Did they hit it there? Ooh, they came very close, but technically didn't hit it. There we go. Okay. So we have an actual test of the POC, so we know for sure that the bulls will have gotten in here. And from an excess proof perspective now, all we really need is some bull bars. We just need some proof. None yet. None yet. That's a heck of a bull bar right there. So a lot of bulls now will be looking at this saying, okay, well, I have to look at this and kind of be realistic. My upside objective should be inside the highs initially. So if I'm putting a stop underneath the low, I obviously can't be a swing trader. I have to be a scalper. And in fact, a scalper still isn't favorable. The target would be outside the highs. So I'm going to need a little bit of a pullback. I can't be a buyer yet, Let's optimize it a bit further, and I would like to see if I could get my average or my target underneath the 130.50. So let's see if we can get a little further down here. There we go. So if we can get an entry point at around the 22 quarters, that's going to be the zone of interest that fits risk underneath the lows and gets targets inside the highs, at least from a scalper's perspective. Remember, from a swing trader's perspective, if we expand this further out to a 2-to-1, we can see that that does still fit, it's right here, inside of the next highs. So even going further out from a swing trade perspective, we know that it still fits the bill. That's that excess proof. Now, the only thing that we're missing, we're getting the bull bars, we're getting the proof, we know where the zone of interest is. The only thing that's really missing now is another break above a new high. If we can break another new high, then we know with 100% certainty that we have everything we need for a trend change. That doesn't mean the trend has to change, but we have everything that we need for it to happen at least. So we've got the bulls continuing up a little bit further. Beautiful rally to the upside. And again, playing it from a scalper's perspective first, we are getting closer to the target objective. Can they make it? They're pulling back. Back to break even. Fiddling around a little bit. Dropping down a little bit further. So this is a really good example of why you have those wider stops. They couldn't quite make that objective. So now we've got a relatively interesting scenario, because still, if we were to look at this from a risk standpoint, the target should still be up here. But if we're looking at this from a actual risk, putting the stop on the lows, we could maybe even squeeze out something a bit wider. Maybe not a 3-to-1, how about a 2-to-1? Yeah. So actual risk still fits a 2-to-1 inside of the highs if we can get this to reverse back up. They haven't invalidated the trade, although they are starting to break down a little bit more. What would be nice is seeing even more excess proof, consolidation, breakout, pullback, continuation of a descending level of resistance like we have here. So let's see if they can break above it. We're testing it, pinging off a break even, breaking above it. Now we have our break. Do we get the excess proof bounce? Nice little pullback, starting to dip back down. Nice little consolidation. Another consolidation forming here. So not only do we have the breakout pullback, right? Not only do we have the breakout pullback zone of interest, but we also have another consolidation that's setting up. Let's see if they can break above. Now, this is very interesting because we still haven't gotten a strong enough pullback to get underneath the lows, and now we have a consolidation break. This would be the excess. I mean, this would be absolutely phenomenal from an massively excess proof. If we go across this whole thing, all the way up across here, can we get a POC? Oh, that makes it even better. Now we got a POC inside there too. Everything is stacking up for the bulls to try to get that zone of interest. Now, keep in mind, if you were looking for the optimized entries, obviously those have already hit, but upside targets are still looking good for around the 15-149s, and nothing has necessarily been invalidated. The only thing that hasn't happened is the full retest. Like, they haven't come back to physically test it. Spoke too soon, starting to dip down. Oh, they still didn't get the physical test, and now we're starting to creep back up towards the objective, and they fill the target. Now, if they're going to break through the 2-to-1, then they'll look for the 3-to-1, etc. But this is what I mean by excess proof. Yeah, it could be very logical that I want to go long here, and maybe logical that I want to go long here. But at the same time, it could have been logical to go long back here. And I don't want to deal with all this every single time. You know, that's not really what I want to go for. I'd rather my life be easier and have me get in and it goes to my target, right? So if we're looking at it from the perspective of even timing, waiting for that excess proof puts you on the right side of things. And yeah, you might miss a trade or two because you're waiting for so long. But I'm totally okay with that as a trade-off rather than taking a bunch of losses over and over again. So hopefully that helps you understand what I mean when I say excess proof and why I find it so important. If you have questions, as always, feel free to drop them in the comments below, or if you have a question that needs a bit more of an answer, shoot me an email, jhb@ssftg.com. Have a great rest of your day, and we will see you all in the next one. Thanks.